All right, we are live. 20 seconds early. You people in the chat can't be saying I'm late. I told you it's not me. But glad to have Brandon back, my Tuesday regular guest. So what's up, man?
Man, it's busy. As I was telling you before the start, and maybe if we have time, if people have any interest, we can do a walkthrough of my two builds. I jumped off camera. My painter Picho was here, and I'm trying to give him some of the instructions because these houses are going to be painted just slightly differently because they're side by side. If anybody wants this early view, I can grab my laptop and the mic and kind of do some walkthrough if people want to do that closer to the end so you can see some of the early, because my filming hasn't come out yet, but I've been recording. I've got three of them put together, and they'll start the end of March on this series of these builds. But we might do that. But the premise of this discussion today, and I thought of something that maybe it creates a reaction, and that's the purpose of it. That Brian is right. You hear me?
Who is Brian though? Let's get
Brian
back to who
Davilla.
Brian. Okay.
Brian Davilla is right. I agree with him from a couple of videos ago on one thing. I don't particularly care for how he comes across, and I think he's wrong on most, but I will give him credit in one thing that I have actually expressed before. So this group has probably heard me talk about this, but he expressed it. You are all entrepreneurs. And the best way I can phrase it is maybe it's a small E entrepreneur that can grow into a bigger E entrepreneur. Let's just take it from our group that if we were to buy one, I know you didn't do this, Mark, but I'm going to talk about people buying one door. Maybe it's a single family or one property. Maybe it's a duplex. You are starting out as an entrepreneur, even though maybe you don't see it that way, but you're starting out as a small E entrepreneur. The beauty of that is you've got that learning curve with smaller numbers of how to produce it and think of it as a business. And what I'm talking about, most everybody here in here knows I'm an entrepreneur. I've had businesses in the past. I've sold and still have one more that I built out starting in 2017. But I'm here in the truck. But you start out, and the reason an entrepreneur, I think, ultimately does that is they want freedom, flexibility, and financial. The problem with most entrepreneurs is they go to the freedom first and they don't work on the financials, and the flexibility never comes. Good entrepreneurs they start it for those three reasons, but they also understand leverage if they're a big E entrepreneur. They're using leverage of the financial. It could be loans. They're also learning leverage from other labor. So they're learning how to leverage not only financially with loans, but they're learning leverage through people. So that's the way a good entrepreneur starts, and he builds out systems, or she, you know what I'm saying, he or she builds out systems to create leverage multiple ways to create this down the road active and passive income for a business. Eventually, if you've built out a big enough organization and you have the right people, it can become increasingly passive. Well, think about those descriptions with real estate. You need 3 P's: people, process, and product. So now you're working on your product. You've got your duplex. Let's just use that as a duplex. You're learning with small numbers how to run a business. You're learning leverage, making money multiple ways with people, with the people you need around you. It could be your mortgage loan officer, your insurance, the people helping you find it, the people helping you maybe do a remodel on it. It's all the people you're using to create the product. And then you're also using financial leverage. And at first, in any acquisitions, it is definitely more active. But as you're stabilizing it and as you're optimizing it, great purchases become increasingly passive. You're thinking in three different financial statements. Profit and loss statement, that's a typical solopreneur just thinks in income and expenses on their tax return. That's a solopreneur. But you're going to be thinking like a true entrepreneur. You're thinking both the profit and loss statement, but then you're also thinking of the balance sheet, which maybe is your personal financial statement, or the balance sheet. That's your assets and liabilities, and your growing income inside of the property, where your loan to value, wherever you started it, where it continues to grow as your tenant, who is your customer, is paying down that note. But then you're also thinking with a cash flow statement, the statement of cash flow, in learning how to operate the property as a business, to where you're allocating the right reserves for all the expenses and all the long-term capital expenses. You're underwriting it in three layers: from a profit and loss, making sure you're buying cash flow properties, income properties; from the balance sheet of having a healthy leverage with good asset value that doesn't put the property at risk, and letting that grow. Then you're thinking of the cash flow statement of, I've got to allocate the right reserves to pay for all the expenses, so that the asset that I own in my business pays for itself fully, that I'm not having to use credit cards or other financing instruments to pay for typical expenses of the business. So there's my sermonette.
Well, when you first told me, so we people that are just tuning in right now, we're going over that Brannon caught me off guard the other week, telling me that he believes Brian was right. And we're talking about Brian, the bald guy,
The bald guy,
Ryan
yes.
Pineda's sidekick on his videos with Michael Zuber. And yeah, he caught me by surprise when he mentioned that to me. And I think
That was
Yas
intentional, Mark. I thought something that would raise your eyebrows and catch you off guard.
well, I thought you were gonna say that rentals don't cash flow, and that's why you're living in your truck right now, and that's why we're recording. But you did, yeah, you did want to touch on that, and I think that from the Zuber videos with Ryan Pineda and Brian Davilla, that probably was the one of the things that um, was a big discussion. So I'll bring up later, but there was a post even in school about someone asking about entrepreneur versus employee. But yeah, Harrison definitely will go. Hopefully, we'll have time a little bit. We'll save some time for the end to Brandon
Okay.
can walk through his property and before
Hopefully
the
it's kind
storm
of
comes.
dark because we're about to have some rain, but I'll do my best.
Yasik does want to know though, where are you going to put the secret Bitcoin storage in those houses that you're building?
I've got a new name for Bitcoin. I call it tulip coin. And those that understand history will know exactly what I'm talking about, and it will prove itself out. It's tulip coin.
Yes, many of you, if you don't know what that's referring to, I'm sure you can Google it or Chat GPT
Google
it, and
tulip
yeah,
mania.
yeah. But yeah, back to your point. Yeah, Brian, I think that was the one thing that people kind of went back and forth on. I think part of the struggle though that maybe people have with the entrepreneur part of it is a lot of people maybe, and I think who is it? His handle, Steve White is the accidental landlord, right? So a lot of people, it's they had a home, maybe they transitioned it into a rental, never it wasn't part of the plan, right? So they have this accidental investment property basically, right?
And
And I
maybe
think
what I
that
would say is they become an accidental entrepreneur.
yeah, but I think that's where the
He is
struggle is
becoming
from.
an accidental little e entrepreneur.
But I think the big thing though is that if you don't look at yourself as an entrepreneur, that's maybe where some of the struggles with being a landlord comes from, right? Would you kind of agree with that?
Yeah, and I think others have mentioned that too, phrased it in a different way, that they didn't understand they are a landlord, and becoming that, you are beginning to run a small business. And when you realize this is a small entrepreneur business, you run it differently than I just own a house that I've started to rent out. That mindset shift that it's not personal, this is business. And I've got to hold that little e business accountable to providing a return. And I do the same thing with my property management business. I make decisions looking at it as a business. I'm making the right financial decisions, but I'm also keeping the customer in mind, both the tenant and the owner in mind. They've hired me to think through all of that, know the laws, and I'm trying to figure out, what's the right decision as a business owner for the tenant, representing the tenant fairly when a landlord wants something that is not right, and whatever it could be. There's lots of things I've seen. But the same thing with us owning properties. I'm also looking at the tenant as a consumer. Are they willing to pay for my product? How can I increase revenues? How can I grow revenues and optimize expenses? Some of the things that I look at, let's just talk the profit and loss side. So when I'm looking at the profit and loss, I use what's called common sizing. What that is, and that was a tool I learned in commercial finance. So you're taking a number and taking other numbers from it and creating a percentage of the top line number. So from this, I'm taking the top line revenue, I'm putting different categories for the expenses, and I'm putting it as a percentage to the top line revenue. And I'm doing that year over year so that I can compare them to percentages. So, say my revenues grew, let's just use an example. I'm teaching finance here. So, revenues grew 20%, but my property tax one year is at 16, but my revenues grew 20%. And then my property tax went from 16 to 22%, but my revenues only grew 20%. Well, then something's wrong there in the business. What is going on that expense has grown higher? You would think my property tax would stay in line with revenues and it would still only represent 16% of my gross revenue because the value has kind of matched the revenues. How can I evaluate that? If it's just a raw number, you might not see it, but percentage common sizing it allows you to see the variances in the business. So what I do, and this is going back to when I really got started with multiple properties back in 23, I looked at my property tax, and that's why I'm giving a specific example. My property tax, and I do not have it right in front of me, so I'm trying to be accurate, but I don't have it exact right here on the screen. It was roughly I think it was 16.4% of revenues. Then I had insurance, which was the next highest. This is the top line expenses was insurance. Insurance has gone up the last 5 years. I was up above, I think it was 6 point something. I can't remember exactly, 6 point something. Then I had my reserves and any expenses. Then my bottom line was the NOI. And I was running, let's just say it was around 9.1% NOI based off the asset. Over the last 3 years, revenues have been flat. And so and then also the financing was below that to get the bottom line cash flow as a dollar amount and as a percentage. So I know I'm teaching some things here. I'm trying to go slow and methodically explain it. So then from 23 now to 26, my revenues have been flat because rents have stayed flat or actually gone down here in my area a few percentage. But so if I were to just sit here passively, my cash flow would have actually gone down. even with revenues being flat. So what I chose to do was look at every single number and say, how can I improve cash flows with this specific situation? So here's what I did. I looked at all my properties and I said, I've got the highest level of turnover in my fourplex. Is there anything I can do? I'm taking active management of what I'm doing. And I said, okay, I don't think this has good curb appeal. And I'm trying to press on the number of my rents. I said, what can I do to reduce my turnover time? And what can I do to attract another tenant faster? So I'm starting with the top line. How can I address it? So I created some better curb appeal, because I know some of y'all saw it at the speech. It was a lot of concrete and no softscaping. So I did a little bit of change of the paint on the front elevation. I added some hanging baskets. I painted the doors a different color. I noticed everybody liked it. They put decorations on the doors, and you could tell they took pride of ownership. I drove by yesterday. The flowers, of course, died over the winter. Well, guess what one of the tenants did? They replanted themselves, put flowers in all the baskets. They're watering them. They're taking pride of where they live. What I also did is I reduced the rents to increase the revenue. Maybe that's a topic for another time, but I went a couple of percent below average market. This was only a few percent. I leased it out in half the time. I had 3 of them vacant. So I had to think through, what am I doing wrong? This is where you're starting to stabilize and optimize. My rent time took half the time. I was only a few points less. This was total of, I think it was about between 3 and 4% less. I've had them increase their length. They've re-upped their rent. So then even though my rents went down by 3 or 4%, I actually took in higher revenue overall for the 12 months, because I had less vacancy time and less turnover in that 4 unit. And they're taking pride because I did just a few little things. Total, I spent about $1,000, dressed it up. So there I addressed my revenues, optimizing my vacancy so that my net revenue for the 12 months that I receive actually went up. It was less than 2%, but it went up by reducing the rent. What's your thoughts on that one piece?
I think you are very like how Zuber would say, you're kind of like a unicorn, right? To
I
some.
don't think that. I think I'm teaching what all of us can do.
Well, yeah, but so I think part of it is maybe because you already had the business entrepreneur bring up, or that's what you kind of started as,
I
right?
follow
So
you.
already going into the rental side, you're kind of coming at, like I said, a lot of people I think are coming at it from the perspective where they had a property they may have lived in, or and it transitioned, and they like they said, the accidental entrepreneur, right? You came in it already as an entrepreneur, so for you, your mind's already focusing from that standpoint. And I
I
think that's
believe.
why you're very proficient at what you do, right? And
And
you're very.
that's my heart of my YouTube channel and this live, is to teach everybody here to become unicorns too. I'm trying to
But
teach everybody to be a unicorn. I'm trying to help.
but to that point, well, we'll get into it later because Hyder wants to bring up some Bitcoin stuff, but that can be for another day. He's just saying, don't call it. Well, not don't call it. He said maybe don't call it tulips until you read some certain things and whatnot. So, but yeah, we'll
Oh, I know. That's what everybody says that owns it.
Hyder will be on next week, though. Like I said, every Wednesday, Joe and Lauren, we're going to try and bring on a school member. So Hyder will be on next week, and maybe he can dig into that a little bit more about the Bitcoin side of things. And tomorrow, Harrison will be on, and he has some questions too. But Harrison's on the chat right now. But I kind of want to maybe bring up too about the entrepreneur part of things is, do you think sometimes maybe people just don't want to associate with themselves with being called an entrepreneur? So let's say like a lot of us are have been sold the idea of passive income, right? And maybe if you associate it with entrepreneur, you're like, oh, but that's like a lot of work I have to put in and a lot of effort, right? So maybe do you think
Well,
that's where the disconnect is?
I think it's being real and honest. At first, it is not fully passive on any purchase. You're learning so much, you're actively learning how to make it passive. Doing it well, it becomes increasingly passive. But I understand what you're saying. Some people, that is not their mindset, but maybe it should gradually grow into that mindset so that it can become more passive. Learning those little tricks of the trade of it becoming. I think of truly passive is putting a dollar into the stock market and expecting a return. And anything that is truly passive, the returns are lower. If it takes a little bit of effort, that's hopefully you're getting that return higher, and it can over time become less and less work. I don't think it ever becomes zero passive. I highly doubt that for anything I've seen in my life. Nothing becomes zero effort and makes good returns. So maybe there's degrees of passive that it becomes. But I understand what you're saying. Some people maybe even have a negative mindset of being an entrepreneur. I just grew up with it. I don't understand that. I'm hearing what everybody's saying.
I wonder if it's because too, a lot of times you hear how many times businesses fail.
You're right. And I'll give you statistics because I was looking it up. We've always heard a higher percentage. So I went to Chat GPT. Whether that's the truth or not, I'm just going to share with that what what Chat GPT said. But it said in the first 2 years, 50% of businesses fail. Within 5 years, I think it said, if I remember right, 70% fail in the first 5. By 10 years, it was over 80%. So me from commercial finance, I used to know those very well because I was looking at financing business purchases. But I knew that I'll give you the statistics. The highest level of failure rate, or one of the highest, was restaurants. And so we were more cautious on restaurant financing because the statistics were significantly higher than the numbers I just gave you. They were higher on restaurant businesses of a failure rate. And we would look at different businesses and say which were the ones that were the highest failure rate. We would ask for the owner to have more experience and put a higher percentage down because it's the bank's money. We're trying to prevent loss. Looking at real estate, I think it's almost inverse. As you as an entrepreneur owning this real estate business, it's an extremely high success rate because you've got a real asset that typically doesn't lose value over time. It only increases in value. The chance of failure rate over time gets increasingly less and less. And so that's why banks are their biggest appetite is real estate financing. There was a window, yes, there was a window in '08 to 2010, 2011, 2012 because of what happened in that. The GFC we had never seen in our lives was a significant decline in real estate, which banks, no one had seen that kind of decline. Well, eventually it worked itself out. And you're seeing banks go back to probably the right type of financing of 80%, 75% type financing, because over time, the chance of being upside down becomes less and less. And think of it as you're owning a real estate business. And what we as entrepreneurs, as you as entrepreneur, most entrepreneurs want to own a real estate or a business that has the highest value as a subscription business. So think of that. You own a subscription real estate business. Maybe not technically as the first one, but yes, it is in a small degree. As you own more and more, it is a subscription business because your customer are signing long-term contracts. They're not month-to-month contracts. They are typically 1 year and 2 year typical leases. That is a subscription type of business that creates consistency of income. Me owning a property management business, because the landlords sign 1 and 2 year contracts, plus the tenants sign 1 and 2 year contracts, it is a form of a subscription business that creates consistency of income. Yes, there are variations over month to month when there's people that move out, but you're creating a bottom floor that is not zero, that happens regardless of your effort. It is becoming increasingly more passive over time.
Um, did I hear you correct? So when you're talking about the failure rate, was it the rate goes down the longer the business is in operation? Was that
No,
what I heard you say?
the rate gets higher. A chance of a business lasting 10 years, if I remember, it's less than 20% of most businesses do not last 10 years. My business, I'm next year will hit my 10-year mark on my property management company. On my sales company, I had it for 12 years. I have yet to have a business. Well, no, I had one business fail. I stand corrected. I had one business fail about 20 years ago. I lost about $30,000 on that business. I learned things. So would I technically say it as a failure? Yes. What I learned from it was a lesson that I made more than 30,000 from the lesson I learned from that business. I've had 3 businesses. My family has had multiple businesses, but I'm trying to share it online. The reason for my channel was to make an impact, not just real estate, but some of my finance experience. But yes, it goes up over the years. I would say with a real estate business, it goes down because you have increasing equity and cash flow over a 10-year period. The chances of failure are very slim. Maybe, Brian Moorhead, and the reason I say that is he has more head than hair. Brian Moorhead fails. Why would I buy any lesson from him? That's what I'm going to start calling him, Brian Moorhead.
We'll call him that on your channel. But GHW448 from your channel says, "Hey guys, thanks for doing this. Make sure you subscribe. Thanks for stopping by." I do want to. There was a couple questions here. Where did it go? Harrison is asking you. Harrison, like I said, he'll be on tomorrow live streaming with us. But he says, "Would you use fiber cement for your siding? Is it too cost prohibitive?"
I haven't even looked at it. I would think if I'm going to manually make something versus somebody that manufactures a product at scale, it would be a challenge for it to be to save me money. I don't know. I don't know. I'm using, these are that fiberboard type stuff.
Flavio's asking, Brannon, if you have the opportunity to sell all the portfolio and switch to one big complex, would you do it?
Maybe I mean, I would never. Everything's for sale, guys. If y'all would offer me $1 million for one of these single families, I'd sell them. I promise. No, everything. I'm serious. Everything's for sale for a price. Yes, if the numbers were better, and I felt like but it's not just numbers. I'm looking at the entire structure of the investment. Does it have the same potential for increase in value? Does the net cash on cash return plus principal pay down? I'm looking at many layers to the answer of yes. So it is a simple yes and a simple, but it's got some complexity to it. Possibly having all of them in one spot, but it has an inherent risk too, being every single investment I have being in one spot.
Josh Burdick does follow up, says, I like fiber cement on my personal house because I'm in a fire threat area. It holds up nice too. My wood trim peels paint faster than the fiber cement siding. Yasik says, if you learn something and apply changes, it's not a failure in my book, but running a business is not for the weak for sure.
You're right. And I'll tell you, talking to a good friend yesterday, last night at a baseball game, he's got a small business and he hasn't been paid this year. He had to hold reserves to cover his expenses. And I've had to do some very similar things. I thought about it and I talked to him about it. I've been there to where I didn't get paid for multiple months, but overall, over a 12-month period, my income was there and made. That's the rewards of taking that risk if the business is done right. Same thing with owning real estate business. There's times your income, maybe you had a big chunk of expense one month, your income went down a little bit, but the overall over a 12-month period, you're still making great money. So there are risks, and it's not for the weak. You've got to have backups or reserves. You've got to think multiple layers. Josic, I know he does this too. You've got to think in multiple layers, but you're doing the same thing owning your little e entrepreneur business with real estate. You're thinking just not one single thought. Is it right? You're thinking multiple layers of looking at it. So let me get one more part of it too. So I talked about the top line revenue, how to increase the overall. So then I looked at the next biggest expense other than finance. The next biggest expense was property tax. Is there anything I can do on property tax? Well, there's two ways I attacked it. So I went into, and this is y'all, I think so many layers. I was asked to be on the appraisal board. You don't have to do this, but this is me thinking. I said, all right, I'm going to take this volunteer position because I'm going to learn. I'm going to learn a lot of layers of property tax being on that committee or that board. I did that, and I also learned how to protest taxes in our state of Texas. So I learned the methods of how to talk to the ARB board, and I learned how to protest taxes. And I was able to accomplish that with a couple of properties and ended up lowering my property tax assessment, which then lowered that dollar amount. That was one way I attacked it and got some things lowered by attacking the value from the income. In our county, we could use income method on my fourplex and my triplex. So I used the income method that they would approve and got it to come down a little bit. Then I went into finding some more properties in a lower tax rate place to invest. I found a subdivision that was in a non-city limit area. It was just on the edge of the city limit, and it went from 2.3% of value down to 1.2%. So on those investments, I lowered the amount of property tax. So from 2023 to today, I've gone from what was it, 16.4, if I got that, remember that number exact right. I am now with the 14 units over my revenues now is at 13.9%. So think of that. I have lowered my overall expense for property tax about, what is that? About 2.5% of gross revenues. So there I've increased my cash flows. I could have just sat there passively with that business and just let it happen. But we're good entrepreneurs. I took that expense and I figured out a way to lower it. Can I get it much lower? I think I'm probably maxing out any opportunity to get it lower, but I'm trying to optimize it. Then I took my insurance. I said, is there anything I can do to shop insurance? Is there any other structural thing I could do to the insurance? I went from 2% deductibles up to 5%, which as far as they'd let me go, to 5% deductibles, and then began shopping those rates and I went from, it was above 6 to, I looked yesterday and it was like 5.4% of gross revenues. It wasn't as big, but it's still something. So I lowered that expense. The other expenses didn't change. So then my NOI went higher and my bottom line cash flow has gone up, even though the rents have gone down a couple of points. My bottom line cash on cash return and overall cash flow has gone up as I've tackled those two big expenses. The final one was financing. So I began looking at my financing, saying, is there anything I would do structurally different? I went to a DSCR company that, because I'm not choosing to refi all the time, I did all these new ones. I'm doing 5 years at 5%, and I'm getting the most optimal rate. And I'm also putting down more, I'm paying down points because I'm not planning to refi these every 5 years. Maybe I'll look at it in 10 to spread out that payment, but I'm trying to optimize cash flow. Here I am at 54, and I'm speaking to all of us late millennials, Gen Zs. We have, if we're just getting into this business, we are trying to get to optimal cash flow faster. I'm looking at ways to do that. I'm not where Cody is, can maybe make a few different choices than I can at 25, 26. Then what I'm trying to do is optimize, get that cash flow a little higher. I'm not trying to do higher leverage because I've got time runway. I'm trying to optimize my leverage with cash flow because I'm at 54 and I want to be retired at 58. So there's just different perspectives, not wrong. It's just different runways. And so I'm optimizing that. So I refied a few properties that were at 7.5. We're closing here in the next 7 days. I took two properties that were at 6.75 and 7.5. I got them at 5.5, paying some points. And because of where it appraised, I'm able to optimize my revenue. I increased my cash flow. It was like 300 and a few dollars in cash flow that I'm capturing today. What I'm bringing to the table at the closing table is about $2,500, but I'm skipping a payment on these two properties. So I'll capture that $2,500 back, but then I've just optimized another $300 to my cash flow. And I'm hitting with the current properties, brand new properties, $50,000 in cash flow over and above allocations for reserves.
Before we touch on this some more, I did want to give a shout out to Andy Lane 5 who's tuning in. I just saw him come out with his second video on his YouTube channel, so go check him out. His channel is in the chat, and yeah, he's putting himself out there. I know it's maybe a challenge for him putting himself on camera, but it's doing a good job. I like his video. It's about faith, family, and fitness. So every week it might be a little different topic, but go subscribe there. Let him know you're enjoying it. But I think a lot of also what you're saying, Brannon, to me is the what I see maybe the biggest struggle, and it's it's that potato is I don't really care if you're an entrepreneur or an employee or whatever you think. It's really we got to get into the game, and it's like pretty much what you just broke down, right? Is not something that someone is looking at when they're evaluating a property, right?
I
But
agree.
that's the thing. People are
I
so
agree.
caught up. So no, but so people are so caught up with all these initial calculations they're running and spreadsheets, and yet there's so much that goes on after you get the property. And like you just said, like you might change your insurance or you're looking at property taxes different, but you have to have the property first or an acquisition first, and then you're going to start looking at different top line, bottom line, and that's why I think people hold them, they put too many roadblocks in front of them before even getting the property. And then, like you're saying, you're looking at it after, and you're doing all these different things to maximize returns or limit expenses in one way. And I hope people, what they're hearing is, we got to get into the game, and don't confuse ourselves with entrepreneur or employee
And
type of
right,
thing.
even me having my business background, that first one, what I'm speaking on today, I didn't know either. So I'm agreeing with you, Mark. What I'm sharing is a little further in the journey, saying, but I agree with you. That first one, you're going to do your calculations, and I'm saying go after the base hit, but it is not a base hit. If you learn, it's a home run, because you have to get into the game making this little base hit. There's about 30, 40% maybe that you don't know until you get into the game. You're just trying to prevent prevent a strikeout, using the baseball analogy. We're trying to prevent a strikeout and just get a bunt, a base hit that works, that you can get a lot of learning involved. You're learning to get on base, learning what get on base looks like, learning to move you forward to get to the home run, is all the things you're learning. You're getting into school, you're watching these videos, you're reading books, you're educating yourself real time with one. You're learning how to understand all the numbers, understand what works. It might take you a month, it might take you a year, it might take you 2 years to learn all these moving parts, that you're learning that 30 to 40%, so that the next one, it's not a single, maybe it's a double, because you just know so much more. It takes time. And I'm just sharing kind of the middle journey too, but also can empathize with the first. What I'm sharing today, I didn't know off my fourplex. I knew maybe some other pieces of it that a lot of others don't know from my background. I knew some of those pieces. I agree. I knew some of them. But what I'm sharing now is putting all the amalgamation of all the things I've learned of my 30 years in finance and real estate, and now owning them with you. We're all sharing our journey. We've got a group here that we're willing to share. I'm sharing it from a perspective that Dion doesn't have, that Michael doesn't have, but together we're stronger than apart. It takes a tribe of all of us that are willing to give each other the learning. We're learning pieces from everyone. I've learned from you, Mark, despite you.
I was waiting for that to come. But where did it go? Steven from the Bronx says, I like Brandon's take on real estate being similar to subscription based business. Those subscriptions make money. I do want to address, I see James Hillis here. So I don't want you to touch on, you can maybe give a quick response to this, but James, this is actually going to be the topic for tomorrow. Harrison wanted to discuss this topic tomorrow. We're going to live stream with Joe and Lauren. And like I said, every Wednesday, we're going to try to bring on a school member with us. But he's asking, as a person with one rental, how can you evaluate if you're growing too fast or too slow? So don't go too in depth, Brand, but maybe just if you have a quick thought on that.
Man, I haven't thought of that yet. So I'm one of those, it takes me time. I have to ruminate a little bit to give a better thought. I don't know. I'm not going to give a thought yet. Maybe next week. Ask me next week. I'll have kind of my thought formed out.
I'll like I said, I'll probably touch on it a lot more tomorrow. I think the easiest thing, and it kind of, this was actually kind of what I was going to get into after about the entrepreneur and employee mindset, but it for a lot of this, it just comes down to know thyself. Yeah, there's I can't tell you if you're going too fast or too slow. It's really just what you're comfortable with. Even this, even if driving on the road, right? We have a speed limit out there. But not you, as you can see, everyone is driving at different speeds, right? Some people are driving a little bit faster. I'm sure I do it. I'm sure I definitely drive a little bit different when my son's in the vehicle, right? So we all have a little bit different risk tolerance, and maybe who's along this journey with us, or who's in the passenger seat with us. But I don't, it could depend on what your other situation is, where you're at in life, right? What other things are going on. So yeah, I really can't say there's a one way to determine it, but I think it really comes down to know thyself. um there was, so like I mentioned earlier, the entrepreneur, like, even though Brandon is the one saying that Brian is right, I'm going to say that I'm going to go on record that I'm not agreeing with Brian one bit. Brandon, this was his topic, but there was a post in school and it says, does it really matter, entrepreneur or employee? And this individual actually, I think they used AI, but they came up with a PDF, qualities of each one, to kind of compare which one you may fall in. So we'll kind of just I'll just name a few. So if you want, if you are in school, you can go check out that post. There is a PDF with looks like maybe 12 qualities on each side, entrepreneur and W2. So on the entrepreneur side, it says high risk tolerance, willing to face uncertainty, volatility, and income swings. On the W2 side of that, it says low, moderate risk tolerance, prefer predictable income and stability. Um, Entrepreneurs, autonomy driven, want control over decisions, directions, and outcomes. W2 is structure driven, prefer clear roles, expectations, and frameworks. And maybe just one more. So, entrepreneurs, opportunity focus, constantly scanning for gaps, inefficiencies, and new markets. And W2 is task focus, excel at executing, define responsibilities within a system.
See, I see those descriptions of anybody that buys one property has some of a portion. I do not think buying real estate, small e entrepreneur, is high risk. I think it's low to moderate risk. So I think I see some of those same attributes in anybody buying a rental. The accidental landlord, not on the spectrum, maybe a little bit less, but it becomes in that middle. I think as an entrepreneurial business, it's kind of in that low to middle area that fits a W-2 employee. I think that's the group that's researching it. They do spend a little more time. I think a W-2 person is a little bit less risk tolerant than an entrepreneur person. I do agree with that. And I do think they tend to take a little more time before they jump into owning their first property. I do think they are probably a little slower in that decision, and they're going to spend more time on the research side. And then they've got to make that mental jump of acting. They have a harder time making that mental jump. And I think sometimes they're willing to make that jump because the other side of it, the fear of not having money for retirement, forces them to jump. And they a lot of times they overcome it because the fear becomes of the other side too strong, and it causes them to jump. I'm just maybe looking being a psychologist here, but I think I can see that with a typical W-2 employee. The entrepreneur guys, they jump first and figure out how to swim later. That is what they're jumping all into the ocean and say, okay, I'll just figure it out. And that's me. I look at an opportunity and say, and my wife is more of a W-2 mindset, way more of a W-2 mindset than me. And I'm willing to say, hey, I'm jumping in. I'll figure it out as it goes. My wife wants to have every system planned out and figured out. So I have that in my own family. My wife is a more W-2 mindset. Maybe it's because she grew up with that. I don't know, but that's her mindset. But it also helps hold me back sometimes if I don't make too big of mistakes. I will listen to her sometimes, even though I'm trying to act like I'm not. I'm listening because she's prevented some things because I have less risk tolerance. When somebody says you can't do it, I'm like, oh yeah, I'm about to prove you wrong. Why? Who says I can't? Because I started in real estate. So people said you couldn't start out as with teams. And I know everybody sees teams now. I was the first group to start out with a team in my area, and they said I was going to fail. I said, "You just watch. I'm gonna prove you wrong." But that's my mindset: is who says it can't be done? I can figure it out. It is a mindset difference.
Do you? I always forget. What? Give me your background. Athletic. You were not track, but what were you? Long distance
I
or?
did well for most of my career, from the time I was 3 to 22. I played college tennis, and then after that, I broke my ankle my senior year. I was the number one seed, ranked 48th in the nation, and when I broke my ankle the week before the conference tournament, I felt incomplete. I felt like I didn't finish my career. And so I had this nagging thing. I wanted to go out on my terms. And so eventually I got into triathlon, and it took me 6 years. And in 6 years, I made the world team for triathlon.
No, I was wondering. Well, Hyder says you're uninvited to his Bitcoin church.
That's all
Um,
right.
but do you think part of it is also like we were touching a little bit on mindset? Is you know from just you talking about your athletic career, the activities you participated in were more kind of individual activities, and that's kind of
They
where.
were. Yeah, I was well, I will say this. I played doubles in college, and that's the only area where I got to play with a teammate, and I really enjoyed that. So I did only play that doubles in college, and I got to see the joy of somebody else working in alignment. And let me describe it. So in doubles and tennis, the great teams work in alignment. What you're doing is that if you take a tennis court and divide it into thirds, you cover 2/3 of the court. And so how we learned how to do that is we tied a rope to our waist, and we began to learn to move together. We would give the opponent the hardest third to beat us at. And great doubles teams, if you look at them, they move in alignment. The same thing with good organizations. You're bringing all of your organization, be it, let's just talk real estate. I'll give it two different ways. In real estate, your mortgage guy, your insurance guy, your person helping you finding the properties, the people that you're using to remodel the properties. As you're getting a team that works in alignment, you win. You're moving together. If you have a business, you're hiring people that see your vision and move in alignment together. The people that say, "Hey, I'm doing," remember from Sesame Street, which one's not like the other? And you got this screen with 9 different people, and some are doing the same thing and some are not doing it. If you've got people that are not doing the same thing, not moving in alignment, you've got friction. Same thing on your real estate team. If you've got people that are not following the vision, you've got friction that reduces the return. You've got to get people, just like playing doubles, that you're moving in alignment, that are covering all the ways to win, and only leaving failure at the hardest part that couldn't probably fail. I'm speaking to a college guy that's interviewing me as a business owner, and those are some of the things I'm talking about with him. You've got to get a group, your people that are moving in alignment.
I think you bring up a great point too, and I think that's where most entrepreneurs will be successful, is when they find out or realize that they have flaws or weak points, and they're able to, like you're saying, bring a team along that's going to
You're
move in the
hiring your
same.
gaps.
Yeah.
You're hiring your gaps, and that's what I do. My wife fills my gaps. She's the opposite of me. She's a little bit less risk tolerant. It's a gap that I have because I'm more risk tolerant. But even my employees, I'm hiring what I'm not good at. I'm good at certain features of the business. And when I learned to hire people that would go in alignment with me, oh, hold on, I just lost
What'd you lose?
my truck shut off.
See, gas is expensive.
No, I'm not.
You don't have any
I don't
cash
pay
flow
for
at
gas.
rentals, man.
I am all electric Chevy truck.
What? I thought they don't.
It's good. Hey, it's great. But hey, I've got one thing I want to share.
Go ahead, man.
Very important. Very important. This is the absolute first time I've shared this. I don't know if anybody's interested. So contact me if you are. I'm going to build a property that I'm going to sell. This is going to be hard for me. I'm going to do this. I made the decision this morning. I talked to my wife. I'm going to build one and I'm going to give the numbers right here. If you're interested, I'm going to build it. And we're going to put this together. I'm going to sell it to somebody for around right at $258,000. They appraise at 270. So I'm not trying to maximize what I can get. I'm going to sell it for 258. It cash flows. I'll get you the rental. I will run the numbers with you. I didn't do it beforehand because I didn't have time this morning. It is a positive cash on cash return at $2,100. Putting your 25% down. I've got all the resources, all the lenders, all the appraiser. I've got it all lined up. If you're interested, 258. It rents for 2,100 with 25% down. The numbers are positive cash flow. I don't know the exact because I hadn't had time to put it together. If somebody's interested, give me a call. I will build them exactly the way I'm building them now. I'm probably going to have one right beside you. I'm going to build two and sell one.
So are you gonna have time to do a quick walkthrough, you think?
You want to do it now?
Yeah, but let's just there is some jabs at you real quick though.
I'm sure.
It says Joe V says all electric, and then Josh says, is it really a truck if it's all electric?
Hey, I could go over the positive attributes to this truck. Y'all would not believe. I love it.
But yeah, if you wanna go for a quick walkthrough.
Now here's what I don't know because I'm gonna leave my truck on. It's using the Wi-Fi from my truck. So I don't know how far it's going to broadcast that Wi-Fi and disconnect.
No, that's gonna put a little wrinkle into things if it disconnects.
I know. So
I don't know. You figure out what you want to do, man. It's up to you. If you what
let me at least get out of the truck. You can see the front elevations of the two houses.
All right.
Let me see if I can figure it.
Joe V is saying the who equals ORAT family, our tribe.
Yes.
Yep. Josh Burdick is saying he tends to lean like Brannon on Bitcoin. He says, Brannon, Bitcoin is the atheist.
Hey, y'all can be wrong all you want. You have the right to be wrong. There's my statement. So you can kind of see, let me see if I can get a spot where you can see a better picture of it.
You telling me you couldn't drive the truck closer?
Well, I'm parked.
All right.
So here's the one. I'm still picking up Wi-Fi. This is a multi-trunked live oak that we've been able to save. Let's see if I can get this down. This is the one we're doing everything we can. It's got one of the rings was over. We calculate from one of the limbs. Live oaks grow slow. So the limb was 30 years old. The trunk was 4 times the size of that limb. So that puts it over 100 years old. And I know you can't see, it goes way, way up.
I do see 100. Oh, no, that's you, 100 years old.
You're great. Oh, love it. All right, let me see if I can walk in a little bit. It's pretty dark in here because it's cloudy. You like my Waikiki Hawaii shirt?
Yeah, sure. While you're walking, Flavio is asking, this house that you're selling, is property management included on the numbers? We're losing your Wi-Fi, I think. Well, Flavio, we can bring that up for him after, when maybe if he connects again. Um, yeah.
Yeah, it's struggling.
Um, yeah.
Sorry, I'm picking up the signal.
All right. Well, I don't know if you heard me, but Flavio is just asking, this house that you're selling, is property management included on the numbers?
I can include it. We can put it all in there and look at which direction somebody wants to go.
Okay. Joel V says he would have to spend 8 hours charging it together to get that power back, I think is what he's saying. Hold on. I got somebody just messaged me something. Okay. No, yeah, I don't know if you got anything else you want to touch on. I did, like I said, remind everyone I'll be live streaming with Joel, Lauren, and Harrison tomorrow. We'll be talking about how do you know if you're going too fast or too slow. Hyder, so I guess Hyder, if you're still here, Hyder will be on next week. So Hyder, yeah, maybe we can dig into a little bit more on the Bitcoin, on why you feel so strongly about it.
Yeah, I'm
Um,
not gonna. That's as far as I've ever gone in it on a public forum, but that's all I'm gonna do. I don't need to argue about it. You can choose whatever you want, but that's my feelings.
yeah, anything else you want to touch on before we sign off?
I
What are you
think
working on
that
next? And what next video you got coming out?
I did spend some time. Let's see. I've got one coming out Thursday. I'm trying to remember what that one is about. I think that one's about focus, if I remember right. I filmed another one the other day about what I talked about today of real estate is a small e entrepreneur business. And then the filming of these builds, the first one comes out the end of the month. I'm trying to time them so that they're back to back to back, so that I'll have the finished product. And once these are rented out, so these will be coming out starting the end of March, and I'm going to go through all the financials on those.
All right. Hey, Bill's here. Good morning, Bill. We're going to be wrapping up soon. But like I said, we'll be live streaming tomorrow with Harrison, school member Harrison. Also, go check out Hyder's YouTube channel. He did come out with a video last night blaming me for some. He was moderating. I was blamed for what happened to him. But Josh is asking, where are Brandon's properties again?
They're in South Fort Worth area, in Johnson County and Hood County, just south of Fort Worth. And listen, hey, give you a perspective of where I'm at. I was looking at some data the other day. So in 2000, Fort Worth was the 29th largest population. In 2025, Fort Worth is now the ninth. It was ninth or 10th largest population in the country. That's the growth of this area. Fort Worth is well over 1 million people in residence now, and this is the area that's growing, North Texas.
Oh, you know what I want to bring up real quick if you have some time is on the daily financial news the other day, Zuber was mentioning how I don't know if he was talking about the administration or someone was, but basically about build to rent. Someone or they're trying to implement that you have to sell it though now after so many years. Oh, oh,
Uh-oh.
sorry, you're here. I see you.
Are you talking about the corporate side? I guess I hadn't seen that. I think
No,
those it's certain number of units. There's no way that
I'm not sure. Yeah, and I just heard him talking about that, and it was kind of the whole thing about we're here from the government, we're here to help kind of thing, right? Beware. But it was about something about build to rent, and after so many years, those investors would have to sell the property.
I heard one. If it's the similar discussion that was on these national large companies, I did hear that discussion, but I highly doubt, highly doubt that's going to happen.
Would you, if that, if I mean, if that did happen, would you consider like lease? Would you be able to lease option your
I'm not
property?
even worried about it. It's not going to happen.
Uh, who's the I don't know if you're calling me the instigator. I think you're calling Joe V. Joe V says Hyder versus Brandon in Bitcoin Royal Rumble.
I know everybody wants controversy. I'm not going to give it the attention.
Oh, so James Hillis, I believe he's saying on to what I just mentioned. He's saying that is correct. Tennessee is trying to pass it for 10 units or more. So maybe Tennessee is the area that's
I
talking
do
about
not
it.
think they'll go backwards. I think it'll only be forwards. If they do it, it would only be forward. They're not going to they'll grandfather what's already there. I bet you, even if they do that, it'll be grandfathered.
All right. Well, that's all I really I don't want to take up too much time. Maybe next time we can dig in. I did see a post I wanted to share next time. It was talking about how um just interesting how someone was looking at passive income. And basically it was fun. It was called pre-funded. And I like
Gotcha.
that. I
Okay.
like that. Yeah. They're talking about how maybe there's not passive from day one, but most things become passive over time. So just like your rental portfolio, you're putting in the work up front, you're putting in the time, and then down the road, it kind of comes passive, just like your retirement accounts. You got to fund them up front, and then you invest in stocks, you get dividends late. So it's just it may not be passive, but it's called pre-funded
Huh.
passive income.
Interesting. Okay.
Yeah. Yes, the AI version that Millennial Mike did of me. I don't know what he did. I don't know what his prompts were, but whatever. I guess all of us Asians look alike, so it doesn't really matter. You guys were able to figure it out. That was me, so I guess it worked, right?
Right.
Oh, need a Brannon AI. Oh, there's definitely a lot behind the scenes. I'll
Oh
send those out.
my.
Those are private. Those are, hey, you know what, Curtis? Those are for members only. You got to sign up for my members only to get the
Yeah,
AI
I
branding.
saw an AI video of me sent to me.
Hey, and like I said, I had nothing to do with that.
I guessed who did it.
All right, man. Yeah, that a fun episode again. Everyone, I'll be back tomorrow, same time. A little bit later than we were before daylight savings kicked in. So now I'm going 11 a.m. Eastern. Tomorrow I'll be back with Joe and Lauren. And we'll have Harrison on next tomorrow. Any final words then, Brandon?
That's it for this week. I think I've caused enough controversy.
See, it's always you, not me, man. Oh, everyone, don't forget Dion will be live today, 4 p.m. Pacific time. So if you're free, come check it out.
Yeah, my builder's here working on the house too. He's going to be on the final video after we're done. So he's here
You're
on
gonna
the
post
video.
that? You have a video coming on that?
Well, when we finish construction, he's agreed to do a video with me, and we'll go over the build. That'll be one of the final of the build part, and then the final will be once they're rented out, and all the financial numbers to these that show that they work from day one.
All right, very cool, man. Thanks for doing this. I'll see you next week, or I'll see you on the Gen Z call maybe on
There you go.
Saturday. But everyone, thanks for tuning in. Have a great rest of the day.